So everybody's obviously getting excited now that inflation is finally starting to come down. But is it? Everybody obviously likes this curve. This is the headline inflation curve, and this is the curve that everybody's been basically trading off of. And obviously we can see that we've got a bit of a peak here, and it's starting to go down. And every point in this line is obviously a month. So from there, 1, 2, 3, 4. So 4 months. So according to this curve, for 4 months, inflation's gone down. Okay. But what if I told you this is not the real curve? This is not real inflation. This is just a representation of inflation. So real inflation looks like this. So this is the actual raw data for inflation. And in this curve, it works a little bit different, but you can actually extrapolate a lot more information as to what is inflation really doing from this curve. So if we zoom out a little bit over 5 years, this is basically, you can see this strip here, that's pre-corona, and here's basically the corona, and then the money was printed here, well actually up until here, and this is obviously post-COVID, and the inflation we saw now. So obviously this is like the last 4 months would sit about, yeah, this piece would be the last 4 months. So let's just basically explain how this works, and that is that this chart on the side here is basically dollars. This is the cost of a certain basket of goods. So if by, let's say, 2019, beginning of year, this basket of goods would have costed $250, and then by 2020, that basket of goods would have been closer to $260. And you can see here by 2022, we're sitting at around $290. So it's basically just how much something would cost. So obviously this curve will generally always go up. It will never ever come down. So you can see that there's a bit of a difference between this curve and this curve. This curve, basically inflation is the distance between the bottom here and the height of the line. That is inflation. And obviously if this gets less, that means inflation's coming down. And if it gets more, it means inflation's going up. But with this curve here, it works a little bit different. The angle is actually the inflation rate. So if it, the angle will most likely never trend downwards, or I mean it did here a little bit during Corona, but in general it will always have a slight incline. So the angle, how steep it is actually inflation. So if inflation is going up, it means the angle is increasing. If inflation is going down, it means the angle is decreasing. So it's all about the angle. So if you look at the angle here post-COVID, we basically want the angle to come down to a point where it sort of gets to this level. But if you look at these and you look at the last 4 months, it doesn't really look like inflation's getting better. It looks like it's getting worse, because look at the angle here. It was basically flat. It was literally flat. That piece there, it's flat. And then it started going up. So it's actually getting worse, not better, especially the last 4 months. So if we look at these sort of channels that we have created, it's basically like you would create channels in stock, right? If you analyze a stock price, you would create these channels and it would stay in that channel, and if it breaks out, then it's generally considered a trend change, and then it means that there might actually be a new trend that's forming in a new direction that stock is moving. Now, inflation rate's very, very, very similar. And you can see we formed this little channel here, this little pipe that goes here. And then after COVID, we formed another one that's going up. And you can see we haven't left this channel yet. So generally speaking, you could actually say that as soon as we leave this channel and we would like go below it, then only would there actually be an inflation change. So let's look at why why the other graph had these high figures. Why are we suddenly getting a drop in inflation in the headline CPI year over year that everybody uses? Why did we get that? And that is because that graph, how it works, is it compares the figures that we get now to the figures a year ago. So basically it depends on how the graph looks now to the graph a year ago. So basically it compares this piece to this piece. So let's just zoom into this area here. If we zoom in, you'll see that basically here's September and October, but this is 2021, okay? Here's September and October, but this is 2022. So if you look at the angle of these two lines, because remember, inflation is the angle. So this is now obviously the real inflation. You'll see that the angle here is a little bit steeper, and that one is a little bit flatter. And that literally makes all the difference because of how it's calculated. So if you look at how the calculation works, it basically, if you want to get, remember the first one was September, and this is September. You basically compare those two numbers. So this distance of this line here, that's very, very, very important. So we take this distance of this line and we compare it to the price here, and that'll get us a percentage. So if we look at the actual calculation, it will look something like this. So it's basically the new figure we received, which would be this one, this figure here, that's the new one, minus the old one, which is this one here, divided by the old one. So then we divide it again by this number, but then we just get a fraction, so we need to convert it to percentage, which basically means we just times it by 100. And if we put it through this formula, so you put it through the whole formula here, you get to 8.2, which you will see if you go back to the curve that everyone's using, the headline CPI. I'm talking about this curve. It was the value, I think it was this value over here. It was actually 8.2 for September. But, and if we go to October, so let's just do exactly the same thing. We're just doing it now for October. So instead of doing this point and this point, we're literally just moving that point and that point. So now, we also, remember the distance of this line. This is very important. We use the same formula, we put the same numbers in, and then you'll get to 7.7, which is, I should have probably written in this chart, that's the latest figure we got here, which was 7.7. Okay, so let's see what happens if history changed, because the thing is, remember, this compares it to history. Let's say there was a small change in history. Let's say this line just went a little bit up, and then it went back and it joined the yellow line again. So basically, there was just 1 or 2 months where inflation was a bit higher, but then it came down and it recovered. So let's do that. Let's put it in here. So basically, let's say this happened, okay? And you'll see here in January 2022, everything was exactly the same. The same basket costed the same amount. Everything carried on exactly the same. Now, let's put it through the same formula. But what you'll see, what will happen now, is the distance of this line now suddenly changes based on what happened a year ago. So if there was a sudden spike in inflation in a year and then it recovered, it will actually change how we measure inflation right now. So now suddenly, if last year there was a spike around October, now suddenly we would have gotten a figure of 6.6. But nothing's changed. In this 4 months here, nothing's actually changed. It's stuff that changed, yeah. But this and this is exactly the same. It's just what happened in between. So that's the problem with using this chart. That's the problem with using this chart. It actually compares the figures we're getting now to the figures we had a year ago. So if a year ago there was a sudden spike in inflation and went up really steep, only if we beat that will this thing still go up. If our acceleration's less than that, it will go down here. But that doesn't mean that inflation's coming down. It just means that inflation is accelerating slower. So let's just go back to this chart. So yeah, that's basically, if you look at this chart, just wait, let's just clear it up a little bit. If you look at this chart, you can actually see that the last 4 months, there's actually an increase in inflation. With the other chart, it looks like there's a decrease. So let's just look at one other example. So this is now back to the headline CPI. This is the graph that everybody uses that says, inflation's coming down. Let's look at this chart. So let's look at June and July this year and September and October. So if you look at these 2 months, it almost looks like inflation came down the same amount. It was roughly 0.5% that inflation came down here and inflation came down here. So you would say between June and July this year, basically what happened to inflation is exactly the same that happened to inflation September and October. But let's look at actually raw inflation. So if you look at raw inflation, look at the angle difference between these two lines. Yeah, this line actually angled downwards. So it wasn't even going up, it was actually going down. We actually had deflation. Not disinflation, deflation during this period here. That means things were actually cheaper in July than they were in June. We had deflation. And between September and October, we actually had, if you compare the angle of this line versus like the 1 year, it's not yet there, but it's close. We actually had quite high inflation between September and October. So it's not the same. So you actually have to look at the raw data. You can't actually look at the year-on-year data only. The year-on-year data is a nice way to measure it if inflation is fairly stable. And it sort of keeps a stable line through the years. You can see if there's an uptick. And then it works well. But as soon as inflation's going up and down and it's going crazy, you can't actually use that chart anymore. And that's exactly what's happening now. Inflation is all over the show. So the other chart we can use is the month-on-month chart. So this basically, instead of comparing this month to a year ago's month, we just compare it to last month. So, but I don't really like this chart because if you look at this chart, this is over the last year. Can you tell me if inflation is increasing or decreasing? What's the general trend of inflation? It's very difficult to say. I mean, you can see, yeah, we did go below zero, which basically means there was deflation. So in the raw data, remember the angle went the other way. This is basically what happens if it goes below zero. But this is not a good visual representation for you to see actually the actual trajectory of where we're going. So that's why, in general, if you actually want to look at inflation, look at the raw data. And I'll put a link down below where you can actually view this data. And we can also look at, if you look at this chart, you'll see that there's sort of a little bit of bump here and a little bit of bump here. So this is raw CPI. So CPI obviously includes food and energy, which is oil. And this bump here was actually the oil price. So you can actually see it very nicely here, which is quite nice because you can see this is the baseline going up and down here. But there's a little bit of a bump here is actually the oil price. And you'll see here it peaked in June if you follow it down here. So this is actually June. And if you look at the oil price, it did actually peak in June. So obviously we can also look at the raw core CPI, which looks something like this. This is now over 5 years, not over the last year. So we're only looking at this piece here. So now basically what we've done is we've filtered out oil and food. And you can see, yeah, this line pretty much, it still goes up. I wouldn't say, if I look at this line, that there really is a trend change. I mean, this was last year this time. This is now. So this is literally the last 12 months, this little piece here. And it's not changing trend. Then another thing you need to look at is that, remember, the reason everybody's looking at this chart is because of the interest rates. They want to know what the Fed will do with the interest rates. But the Fed doesn't look at this chart. they look at the PCE chart. Now, this is the PCE chart. But this is raw PCE, not year-on-year PCE, raw PCE. So very, very similar because they are both measurements of inflation. It's just that the Federal Reserve choose to use PCE and not CPI. So very similar chart. And yeah, I also don't see a break in trend here. So the angle is still pretty much the same through the last year. So I don't know. I don't see any reason to get optimistic about inflation because it actually hasn't changed trend. The only reason why it looks better is because we're comparing this piece here to this piece here. And you can see here, there was definitely a very slight uptick in angle. So it was a bit more. So that little uptick there will actually mess up your figures here. So that's the only reason why it looks good on paper, but it's actually not. So that's why I would recommend, please look at the raw CPI data. I will drop a link in the description where you can get this data. Yeah, if you like this video, please remember to push the button. And if you want to see more, remember to subscribe. This is Steve. Until next time, happy trading. Ciao.